Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning, good afternoon, thanks for joining. We're gonna get started in a couple minutes here. Please trade with proper risk management. There's a lot of volume trading, big moves, and we're gonna get started in 2 minutes.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome to Stocks Number Trading. Thanks everyone for joining. My name is Ron, my partner is Dave. It's almost 11 a.m. Eastern in the next 3 minutes, and it is Wednesday, January 21. So thanks everyone for joining. What a wild day yesterday. It's been in the markets and including today. Unbelievable moves in the metals, specifically with gold. And it hit an all-time high last night, guys. It was unbelievable, the bullish run. And we got very high, approaching 4,900, close to 5,000. Guys, we just, a couple minutes ago, there was at 1050 right here, a buy set up from the SST Trade Ideas, and it's running right now 100 pips in profit right here. No wick, pull back, and we're looking for the buy here at 4843. If you guys are in, please start managing this. If it does come back down, you could be looking for a re-entry, or if it comes a little deeper, you could be looking, but it is building this leg up, coming after this big little sell-off coming in the markets. But we've been saying all-time highs on every single call when we get in with gold. But that's the way how the markets are moving. And someone said to me they just started trading this year. They were learning a little bit in November and December, and they put it into effect at the beginning of January. They've been trading gold. They've been trading with the trend, buying the dips, and they said to me, Ron, is trading really this easy? No, it's not. So guys, don't always expect markets to move like this. We got some unusual times around the world, and but not always do markets move like this, especially with gold. So if for some reason, let's say the market flips and gold starts selling, and it goes into like a real bear trend, don't always have that psychology just buying every single dip, because then in a bear market, if that's what you're doing, you're going to get yourself in trouble. It's just like when you're selling a bull market like right now. So congratulations to everyone that's doing very good in their trading, but trading, no, it's not this easy. But when you get a trend in the markets, yes, then trading can be a little bit more simplified. If you're just trading with the trend, and if it's in a bull trend and you buy the dips, yes, you could be very successful, but also we can say the same thing for if there's a bear market. So I wish every single day was like this. But, for you guys that have more than 1 month in trading, you guys know how real trading works. So sometimes there's times in the markets where we go through these cycles and you can take advantage of them, but always have your mindset and psychology always thinking about If it does go into a bear market, you don't always just want to buy dips. And if that's how you think trading is, then it could get you into a lot of trouble. Okay. So thanks everyone for joining. Let's get into this. We have a lot going on, like news-wise. We had Donald Trump just wrapping up his speech at Davos in Switzerland for the day 3 of the World Economic Forum. I think he spoke for an hour and 20 minutes. The fact checkers are working right now overtime to fact check on all of his statements he was making. So I that would be a job that I wouldn't want to do, is fact check all those things that he's saying, because not all of them are true. There's some exaggerations with when he talks as well. Okay. But I'm going to get started. We're going to go over today's news. If you guys are trading, just please use proper risk management, because look at the size, like just this bearish candle, just measuring it. It's a 300 pip candle. Okay. It's a $30 move in gold. You're seeing some extremely large volume based candles. So if you're using like a very over leveraged stop loss and things like that, you could see, if you're on the wrong end, you could do a lot of damage to your account. So please lower your risk trading in these type of markets like this. It's very, very, very big moves. Like look at just this bullish candle engulfing coming up. If you were continuing on your sell, that candle right there is 150 pips. Right? So you could do a lot of damage to your account if you're trading with a large sizing and you don't have the account to sustain that. Okay. There's the retest right now. So if you didn't do anything just on that move from, if we measure it from the bottom to the top, that was about 100 plus pip move. And then you see, if you don't do anything, it can retrace all the way right back down. And now it's retesting this area, and it could possibly consolidate to continue to go, could consolidate here and still maybe push down. So again, we're going to get into this. We got to do a top-down analysis. And we're also going to do silver today because someone on YouTube messaged Liberated after our call yesterday and wrote a comment, said, Ron, can you do silver as well? So I thought maybe it's a great idea. Let's do gold and silver today. We'll do analysis on both of them. We'll put them side by side. The only thing with silver, the difference between with gold is, yes, it does move pretty similar, but the spreads are different. Okay, for silver, spreads fluctuate. You might have a higher spread with your broker, so that's why a lot of traders favor to trade gold over silver, is due to the nature of the spreads and the volatility and also slippage with silver. But if you feel comfortable trading it, again, we'll analyze it and we'll put them side by side so you guys can get a look at how they trade as well. Okay, news-wise today, lots going on. So Donald Trump just spoke at the day 3, right over here. So you see USD, red folder, President Trump speaks. He spoke, is starting a little late. Even yesterday he was set to speak at 1 p.m. I don't think he started till like 2 p.m. And so he spoke today, said a lot of things. So we have World Economic Forum, day 3 today. We did have some U.S. news. And let's see if there's anything going to be happening in our session in the afternoon. Not much. And then looking forward to tomorrow. Tomorrow, when you're in the news, Thursday, remember, we do have some U.S. Unemployment claims coming out tomorrow. Final GDP over here, quarter over quarter coming out. This is all 8:30. So you guys know that block is the COMEX block and news block in North America. We start to move into Wall Street. Yesterday, Dow Jones dropped approximately 1,000 points. It's kind of bounced today. I think it's recovered 400 points. So just not even looking at a chart, not even looking at a candlestick, just doing mathematics. If it dropped approximately 1,000 points yesterday and today it's bouncing back, it's kind of counter coming back up. Half of 1,000 is 500, 500 in there. And it's recovered like half of its losses yesterday so far. It could come up more, or it could just trade in this psychological counter trade. And if it still continues to, if there's sellers in the market, they could push today's gains back down and continue dropping the markets. Okay. So it is a nice little bounce today, but when we look at yesterday was a big sell-off, so it's recovering a little bit. Can it recover all 1,900, 1,000 points? we'll see until the day ends. Will it use tomorrow to recover, or will it start to consolidate near the end of the week? And we'll see how we move into next week. So when you just talk numbers, sometimes you don't even have to look at charts when you're just talking the numbers, because you know now like 50% of everything. So if you tell me a security had this much gains the previous day or this much losses, I'm already doing the math in my head to calculate 50%, like a point of control, if it's a counter move, if it's still trending, anything like that. So that's how you can utilize these numbers to your advantage. Okay, and we also had earnings yesterday. If you guys remember, Netflix was in the after hours. They're in the red right now. They didn't have the greatest of earnings. They acquired Warner Brothers in an all-cash deal. So I believe they're trading at around $85 a share, somewhere around there, last time I checked. Today we had some pre-market earnings, some big names. Johnson & Johnson was at 6:20 a.m. Halliburton was at 6:45. Charles Schwab was at 7:30. So these are components of S&P 500, Dow Jones. And you can see Johnson & Johnson had good earnings. EPS was a beat, revenue was a beat, good growth, good forecast. Halliburton was another good one, and Charles Schwab, American Financials, was good as well. So, and then in the after hours, there is some more earnings coming in. Kinder Morgan, Bank of California coming in. So there will be after hours earnings too. In the news right now, JP Morgan upgrades Suncor, downgrades Cenovus. So there's upgrades. Gold extends its powerful rally as crisis over Greenland worsens. So guys, I've been accumulating gold for a run. Here's a couple of them right here. If anyone is familiar with these, does anyone know what these are? They're not gold bars. It's 1 million. It's Paco Rabanne. It's gold. It's the cologne. So, they're not gold bars. I wish they were. They're just cologne. But I've been accumulating those. And this I got from a gift from a sniper. And look at this thing. How beautiful it is. This is awesome. Does anyone have one of these? It's a gold bar. It's whiskey. I haven't opened it, but look at the size of that thing. It's nice to put in your display shelf. And I have it it's beautiful. So I wish this was a gold bar, but no, it's not chocolate. It's a distilled whiskey. So 1 liter. But guys, get one of these from the liquor store if you guys can. They're pretty cool to put in your display shelf. So I wish those were gold bars. They're not. Cologne and whiskey. But they're probably worth something right now. Anyways, guys, we got Netflix was in the earnings. Okay, so they're down 4% right now after their earnings. World oil market faces significant surplus in Q1. So, supply and demand, when we see these things, we got to follow these inventories on a weekly basis. Carney spoke yesterday at the World Economic Forum. Today was Trump's day. Lots going on. Wow. Trump at Davos. Homes are built for people, not corporations. What else is going on? Okay, so we see there is some green in the markets. S&P 500 is up 0.5% right now. We've got, right over here. My apologies. That was a Canadian. American. S&P 500 is up over 1% today. Remember, there was significant losses yesterday. So when we see green, it still was red yesterday, so it's making a little bit of a bounce. Dow is up 1%. NASDAQ is leading tech 1.2%. Russell, the mid caps are up 1.5%. Volatility, lots of volatility in the market. This is the volatility index. And gold futures, you guys saw from last night, what a pump it was. It was fun in the Discord last night with gold. And gold is still holding on these gains, trading at right now in the futures at 48.30, okay? In our Discord, we've sent out signals throughout the day and yesterday. Let's just take a look. This was the one I was just talking about. It was sent just right before we started to call it 10:50, looking for the buys above 48.43. So I showed you where it closed above, short wick, pulled back, and then popped for that 110 pip move and then retraced back down. So that's why it's good to have like a little bit of a plan, or move your stop loss, reduce your risk, take some profit, go to break evens, things of that nature, or let them run. But you gotta go through those motions again. Okay. So gold right over there. Some FX pairs. that were sent out. This was a AUD JPY currency pair. Was rerunning over 115 pips using these static locations at 106 right over here, and also in the indices. There was the sell from yesterday on NASDAQ, okay? And just moving forward, guys, thanks everyone for joining today on Zoom and YouTube. I appreciate all of you guys. There's a free Telegram channel. It's our SST free Telegram pinned at the top of YouTube. Here it is here. So you get our links to join us on our YouTube upcoming sessions. This was Dave and the Snipers early on, trading through that volatile session during Trump when he was speaking. So there was a nice, beautiful long Snipers took on NASDAQ today. So you can review that and see what goes on also in our private sessions here. Before and afters of the trade signals. This is what I was talking about, guys. This guy Liberated right after the call wrote us a comment, and we read it and we said, okay, so his question was, hey, Uncle Ronnie, is there any way you can do gold and silver together? So thank you to our friendly American. So, I'm not going to put tariffs on him, but what we'll do is we'll honor our fellow Americans over here, and we'll do it for Liberated. So guys, I encourage you guys to write comments, so let us know what you guys want out of us at SST, and we can do our best to try and make these things happen. So today we're going to do an analysis on gold and silver side by side, and you guys figure out what you guys want to trade and watch and see. Just analyze, see, do they move similar? Is it a security that you want to add to your watch list? Maybe not. I don't personally trade silver as much due to spreads, slippage, and things like that. I prefer gold. That's just my opinion, but everyone is different, okay? So everything we do at SST is all available in this free Telegram that's pinned at the top of the channel for you guys, okay? And finally, guys, here's our website, stocksnipertrading.com. Lots of education. If you guys want, like later on at the end of the call, if you guys tell me a topic that you're interested in, I will find you the course. I will find you the webinar. I will find you whatever it's related to help you guys with your education over here. And free blogs are available for everybody, okay? And finally, guys, please hit the subscribe button. We're not getting a lot of viewership in the early year. I don't know what that is. It's kind of like this when we start New Year's. We don't have, and then trading starts beginning in like February, March. I don't know what it is. I think some people are still on Christmas holidays and relaxing, but they're missing out on a big time in the markets. Unbelievable. Like these last 3 weeks have been insane. Some traders are hitting weekly, monthly goals on gold in a session. It's a scalper's paradise right now. I scalp 1 minute candles, and I was living in paradise last night. You were seeing 50, 100 pip 1 minute candles. If you can target those entries, it's just, I can't even explain anymore what can be done. But you got to use proper risk management. Okay. So we're going to get started with this. We're going to do gold. Welcome everyone on Zoom. Thanks guys for joining. Sergio, welcome again. Trevor, welcome. Thanks for joining. Dale, Mike, welcome. Justin, thanks for joining. Mike, Stephanie, good morning. Sang, good morning. Mike, yes, I know every day we say gold hitting all-time highs. I just keep putting an orange line and just keep putting it up higher and higher and higher. So welcome, guys. Timmy, you got one too? Awesome. Yeah, it's good cologne. Araldo, you have it's nice. I know. I love it. It's one of my favorite colognes. And it's in a gold bar, so that's why I like it too. And everyone on YouTube, thanks for joining. Welcome, guys. Justin, Rajesh, welcome. Joe, thank you for joining. Mars, welcome. Krishna, welcome. Romario, thank you for joining, guys. I appreciate all of you guys. Remy, good morning. Welcome, guys. Okay, so let's get into this. What we're going to do is start off on the daily. Okay, so lots to talk about. Wow. Okay, so look at the charts on gold on daily. So you can clearly see this thing is ripping. The last 3 days, the start of this week, Monday, big bullish candle closing above structure, a short wick. Tuesday, shallow pullback, short wick, pop, drive, close near the high, another short wick. Today, ignited basic, ignited open, pop that wick, continue to drive. So we got up to 4,888, okay? $12 short of 4,900. Not too far away from 5,000. Unbelievable. We were saying in the group last night on Discord, we thought gold would take this entire year, entire 2026 to get up to 5,000. We almost had that last night. Like, that's how crazy things are getting right now, okay? So those are three big bullish candles still moving off of this trend, okay? So is there some zones now we can locate? This is one of them right here. Okay, right over here, you can locate this zone. You can bring it in as you got a wick, you got that body. There was resistance. Now you clearly see we are above it, extended into the future. Will gold ever come back into 4,500? It's a long ways away, but if it comes in here, there might be piles of pending orders waiting to buy that dip in there and test this level. Okay, we're nowhere near that. So now what we got to go off of is price discovery, zones above us that we've never visited. So we have to use psychological numbers to identify those. And what we can use is like points of interest off of these daily candles. So first thing is I use yellow lines. There's a body close and a body open. Let's use a yellow line right here. And let's make it a little thicker. So this area is obviously a point of interest. This is where Tuesday opened, and you can see we have not retraced back into Tuesday's opening price. So it could still be a supporting level. When we get there, you can set an alert and wait for it. Again, another point of interest is where we closed yesterday and where we opened today. It's right there, okay? So 4,760. Now when I'm following, and what I can also do is see from just the open and the close and the transition to the next candle, see all of this big blue candle on Tuesday. Again, if I like, I can cut that in half. Exactly. I can guess where halfway is just in case it retraces halfway, picks up a wick and goes up and doesn't come all the way down here. I just at least want to be aware of it. How can I do it? You can either guess, like right there, that's me guessing where I think in between those two yellow lines. I think this yellow line, that yellow line, that's the halfway. Okay, sometimes it's not a great idea to guess when you're doing a top-down analysis because you have some time. So maybe it's best to be as accurate as possible. So I use my Fibonacci tool. If I just locate it on the bottom of that yellow line and I put it to the top of that yellow line right there, then it tells me exactly. So Ron was pretty much bang on by guessing, but there it is. I just overlap it right over it. So now I know exactly the halfway point. If you want to take it a little further and you want to find a point of control of that body, you're welcome to do that as well. There's the point of control. And now you have a control point. You have a little bit of a buffer, like a little bit above the exact halfway point and a little bit below. So you give yourself a little bit of a zone, okay? Because it might not just come directly right into it and go up. It might come touch the top of it, might come down a little deeper. So you want to give yourself a little buffer of a zone, okay? So that's there. Can stretch in the future. I see we have not traded into this. So that could be a pending block waiting to be activated at some time. Now, look at the short wick. We opened, like if I was to draw a purple line, there is a purple line. Our lowest point, okay, is right there. So you can see it's a shallow pullback. So when we opened, it was initially bearish for, I don't know, a couple minutes. And then boom, it just got the shallow pullback. So you see it didn't come all the way down into there. It did its job, came back to the opening position, short wick, it filled it, and look at the pop, okay? So, wow, this unbelievable daily candle, like just ripping right through all of this resistance. There was 4,800, okay? So you know when you mark up psychological numbers, let's just acknowledge 4,800 right now, okay? And because it might be a point of interest at some point. So you see how I just located 4,800, drew a yellow line. We're above it with the volume. If it ever comes back down to 4,800, that could be support where it builds to continue to go up, right? So 4,800, we ripped right through this. And how high did we get up to? So now we can follow the volume. It came all the way up here, all the way up here. And that's our highest point. That's all-time high, not just the high of the day, Normally it would be a purple line representing the highest point of the day. You can do that if you want to do it like that, but that's my all-time high. So I use the orange, bronzing, tanning Donald Trump face over here to illustrate that that's an all-time high. So not too far. Okay, so what would be if we continue to come back up and break this all-time high, where are we going? Obviously 4,900. Okay, there's your next psychological number, 4,900. You can see it's not too far away. Right there's 4,900, yellow line. Okay, and then if it continued to rip up, I would locate 5,000. It doesn't get any more psychological than 5,000. So draw your line at 5,000. And what I would do is give yourself a zone, maybe 50 points, 25 points above. I'm going to go 25. So to 5,000, 0.25, right? And 25 points below 5,000, easy math, is 4,975. Okay, so you see how I'm drawing a zone now, and I'm giving myself a buffer right around 5,000 of $25 above and $25 below. I make it red and I locate it. Okay, if we ever do trade into there, this could be where gold, kind of tapers off. Who knows? Unless there's news, and it could just rip right through there. But I want to acknowledge that just in case. Okay. Now, what we got to do is we got to follow where we just got rejected, and it's coming down. We still have some good volume in today's daily candle, which could definitely refuel itself and come up this wick and travel back up there. Okay, see this cut point from the opening and the closing? See the cut point, 4,800? It is representing exactly 50% of our current volume. So let's see maybe if the sellers can manage to bring it down to 4,800, and will buyers be there to bring it back up? Maybe we don't come down here and it continues to build its way back up. Okay, so it is clearly very bullish. It's still on this one leg where it's continuing to move up. We do got a little resistance right now, but we haven't kind of discovered where a neckline is. If it pulls back, will it go back up and then test the all-time high, maybe a double top, and then they drop it back down, things like that. So this is a nice run, start of the week, nice strong weekly move. Now we got to break down this daily candle, and I'm going to break it down into, I can go straight into the 1 hour, but I've been doing lately 4 hours to kind of break it down to you guys. 4 hours. If you're a swing trader, 4 hour candles are kind of your preferred swing trading time frame. So I can see we moved up yesterday. I can see now the 4 hour candles, exactly what time they were, how they moved. I can see this big one, Tuesday was the opening price, 6 p.m., very bullish. I can see now it was 10 p.m. to 2 a.m. when we hit the all-time high. And then I know 2 a.m. is pre-London. It got rejected. Here's the European volume, 2 to 6 a.m. It came down, but it came back up. But you see now it's getting rejected. So you can see that if I was to locate from the all-time high to the 4 hour bodies, this is where I could start to draw a red zone. Okay, see what I'm doing here? See the all-time high orange line, and then I come down right down to those 4 hour bodies. Now I see we traded in there, back down. We traded in there, back down. I can extend this into the future, and if I see 4 hour volume closing above here, new all-time high, I flip it green, maybe we're gonna drive higher. But right now you can see here is where there's a block of sellers in the market. So they've been here. They started right here. So you can see for all night last night, they came in here, back down. Europe came in here, back down. 6 a.m. to 10 a.m. This represents everything COMEX-wise, Trump speaking, all of that. And now we're pushing back down, okay? So now we at least can see a top. So we came in here and it's pushing down. So will it come all the way down to that 4,800, 50% of that 4 hour candle? It's already got a wick coming back up. So maybe it wants to consolidate now for the next 4 hour. It could be just going up, coming down, going back up, going down. We might be in a consolidated phase. However, it could just pick up and continue to break right through here and produce a new all-time high. But what happens if it comes in here and it's the double top and then coming back down? So we got to figure out where the bottom neckline is, and then we can see where gold could literally start to sell off. But right now it's still bullish. It's still trending up. It's still making higher highs and a higher low. So we still got to respect our 4 hour buyers, okay? But there is sellers we can see now in the market, okay? So further breaking down 4 hour, I go into 1 hour. Now I can see more specifically. Futures market, 8 p.m. was a big bullish hourly candle. You cut that in half, figure out your point of control. Look, you could have bought right there that last hour. Did anybody do this? Okay. Is it just me, again, that does this when I'm trading? If I see a big bullish candle like that, open, close, grab, look, I'll do it for you guys. Okay. I know it's already happened, but this is why we want to get you in the habit of doing this prior to it happening. So where's half of that hourly candle that opened the futures market? It's right there. I use a white line to identify hourly. Can I do the same thing? Find the point of control a little bit above, a little bit below that bar? Yes, that's how you do it. And I make it green and I stretch it into the future. So now I can see directly when this hourly candle, 10 a.m., just came down bearish, 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 bearish. Look, it tapped right into that point of control. Yes, it did take multi-hours. It took 2, 4, 6, 8, 10, 12, 14 hours to come back in here. You guys know how bullish gold was, so it's no surprise that it took that long. But look at when it came in here, there was 14 hours worth of pending orders waiting in there. That got triggered and just rejected and came right back up here. But they did not close with a blue body. They did not flip the candle to be a bullish pin bar. It didn't close strong like a hammer to break out the next hourly candle. It closed as a spin top bearish so it opened and it was bullish, but look, it came up again, lower high, and now the sellers are still coming down this wick. So will it maybe make two bottoms here? Will it catch a higher low? Or will sellers continue to take out that wick and close below there? Then that zone will flip red and we might have further move to the downside. However, this is where it could build. Maybe we've established some zones now. We got a red zone and a green zone. Okay, so that's what we got to watch for. And then this is where it could just consolidate in here. It could be black, maybe open up blue, black, blue, and eventually we're going to make a move either to break new all-time highs up here or to break down here. Okay, so now I can start to see how it came up. What time exactly was it when it hit the all-time high? 1 a.m. 1 a.m. and then it was bearish. Here's pre-London, 2 a.m. Here's London, 3 a.m. There's 4 a.m., 5 a.m., 6 a.m. Look how the volume was thinning out, probably preparing for Donald Trump going Davos. There's 7 a.m. Here's Comex and Donald Trump. If he started right at 8:30, I think he was a little late. And then you see it right there. It closed at the highest point. There's where it didn't kind of break out where it should have. So then 9 a.m. came down, closed bearish engulfing all the way back down here. It opened, look, tested into 50% of that bearish candle. And then we came all the way down, back up. So this is where we're trading right now on the hourly. Okay, it's getting a little, we're not really, trending like this, where it made these highs, consolidated, new highs, consolidated, new highs, and continue. Now we're getting, it's coming down, going back up, coming down, might go back up. This is where it might get a little choppy on the hourly, okay? So when we go into the 5 minutes now, this is what we see on the 5 minutes, okay? So now you see there's a big bearish candle at what time? At 9 a.m. Look at how it came up. This is where you can kind of back test and learn how an hourly switch up happens. If you were in buys going into 9 a.m., look at what they did to you. They just slammed the elevator down and it kind of, you gave away a lot of profit. And those are big profits. These are big candles, okay? And then you see that's a big bearish engulfing candle. So what I talked about on the daily, 4-hour, hourly, same applies to a 5-minute candle. That's a big bearish engulfing candle that closed below all of this structure. Did you cut this candle in half? How do I do it? I do it with this red line. This is my cut line. This is like what I trade off of on my lower time frames. So see how you could literally just cut it in half and look at the blue candle. Came right to the halfway point and didn't close above. Look at the next one. Impulse and then came back down. There's where it came and closed above. But look, it didn't do its job to, break that wick and continue. Just, it came back down. There again, it tested. Look at how that was like a fake out. Look at right there. It didn't do, and then the big drop again. Okay. So you can do that exactly by cutting it in half, or you can do it the same way like this by figuring out your point of control. Same thing with the fib tool, opening price, closing price, 50% red line right there. And then you figure out your zone right there and there. There's your zone of that bearish candle. I illustrate it by being red. So you can see it came in, back down, came in, back down. There it closed above, But you see how they fake you out? So if you just waited and you didn't buy right away, when it came down to 50%, did it get a wick and then pop up? No. It came all the way down and closed below 50% of that candle and continue push down. Came back in and look, it's still cannot close above that red zone, pushed all the way back down. I can stretch this into the future and I see now it's lower highs. So they're offering even lower. So buyers got to do a job to get it back into there. Okay. So now we came all the way down. We found the bottom right there at that green zone, 1020. We came right back up. Okay. So you can see now we're getting a little bit of resistance right there. I could even cut that big black candle right there in half. And that's the zone again. You know what I mean? Sometimes you can kind of just guess a little bit above half, a little bit below, and you can visually see the zone yourself without even using a fib tool. When you get this much experience and just practice, you'll be doing that. I do this on the 1 minute sometimes. I don't have time. You guys see how fast moves are? So sometimes you got to be able to just cut it and predict where a little bit above and a little bit below. That's me guessing. Okay, so let's use the Fibonacci tool. Let's go from that candle, open, close, right? See how close I was to guessing? I was a little off by where I placed that. So if you're a little off by cutting it, then you're a little bit above, a little bit below is going to be off. But there's more accurate, okay? And then you can see that's where that block is, okay? There was some volume that closed above, but didn't really do anything, okay? So now we're trading right back into it with a higher low. See where we came down? It pivoted right here. Look. Still holding above 50% of this candle. Okay, so when we bring it up, it's holding right there. So we came up. This is the big neckline. Came back down, pushing right back up. Okay, so let's see now. Can this blue volume physically again close above here? So then maybe fill these wicks to continue to drive up to here. Or are sellers going to push this thing right back down, break this, and then it's coming back down to this green zone? Okay, so this is what we're going to watch now. It's producing, like when we're looking familiar for patterns we recognize, there's one bottom, there's the neckline. Okay, so did it come down for a second bottom? No. Did it come down and take liquidity? No. It's produced a higher low, so buyers are asking to trade up here, and now it's coming right through here again. So naturally, we should see it maybe break through, break these wicks, and come up to there, make a new high, and that might be, we can see sellers, sellers, sellers. So maybe it comes in there, it could possibly sell back down. But then this might be a green zone, and it builds off of that, has enough to break through here, okay? So that's what we got to watch for right now, okay? Trevor, where did you take the fib from? What do you mean? Like, where did I plot it on a candle? Opening price, closing price if it's bearish. If it's a bullish candle, opening at the bottom, closing. Just the full body. I do it on all time frames, daily, 4 hour, hourly, 5 minute, 1 minute. That's just if I'm locating the point of control in the 50%. If that's the question you're asking, Trev. Okay, so you see it came right in there again, right to that red line, and it's getting rejected back down. Okay, so what we can also do now is, once your charting, your analysis is complete, you can add some indicators. Some traders trade with this indicator, RSI. I can see that the RSI, we are below the psychological 50 right now. This is a strength indicator. Anything above 50 on an RSI indicator indicates strength. Till it gets up to 70 or above, then it's in an overbought territory. And if we're below 50, it's suggesting that we're in an oversold condition. If it gets down to 30, it's oversold. But when it's trading right at 50, see how it came right up to 50 and bounced down right up to 50? That's that consolidation we see. So maybe we got to see, can the strength get above 50? Then maybe it might close above here and have some more strength to get through here. Some traders use that indicator, RSI. Other traders use EMAs, like an EMA 9 is this green line. We're right at the EMA 9. And then an EMA 200, we're right at the 200. So I kind of don't like to trade when the EMA 9 and 200 are kind of overlapping, because then there's this type of sideways range action. You know, like I like to trade when the 9 is diverging away from the 200, then you kind of have a trend going on, you know. So right now you can see it's kind of, we're in a tough range where it's just going up, coming down, going up. There's nice pips to be made if you're pipping and dipping out of here. But if you're holding onto a position, you can see buyers are holding, then sellers are holding, buyers are holding. So it's eventually going to accumulate and possibly break out of here to the upside or to the downside, depending on who accumulates more. Okay. And then the final indicator that I use is the SST daily bar. What this indicator is this big bar over here, this big candle. This one is representing the entire day's move. So there's the opening price yellow line, there's the low wick, the purple, then it came all the way through. I can see now, like I can go backwards and look on the 5 minutes. There's the opening, you know, like at 6 p.m. I can see when it opened, had an initial drawdown, and then since then just drove up right there to the daily high, which is the wick. And then since then it came down, back up, came down, and this is now representing the wick coming down, this 5 minute trend right here, going down, coming back up, lower high, going down, lower low, coming back up, going down, holding now building at this area. So if the daily candle can continue to build, maybe it might build to fill its own wick, okay? Is there any questions, guys? I'll do silver in a moment. We'll do the same thing for silver. But what we could also do is maybe just watch and see what's going on here. Okay, so it's coming in, and then you see how it's still trading in here. We do have some sellers in here. So what I could wait for is confirmation that another blue candle can close above here. But we have to be careful because there a blue candle closed and then it came down. This blue candle closed there too and went down. Okay, so you know, we got to be careful for fake outs too. Guys, thank you for everyone joining on YouTube. If you guys can hit the like button, we'll do silver in a moment. Subscribe to this channel if you haven't already. We do appreciate you guys. You guys help the channel grow, and you guys keep us motivated to be here every single day. We're gonna grind it out until we get that 100,000 subs. No matter if it takes us this entire year, we'll get there. We take it one trader per day. And just please trade with proper risk management. Like these are big body candles. Just measuring that last blue candle, okay? You can see it's about a 60, 70 pip candle, 6-7, 60, 70 pip candle. So these are big moves. If you think that you're going to trade with a 20, 30 pip stop loss in today's markets and trading gold, like you will get stopped out in a couple seconds if you don't nail the entry. So just like rule of thumb, if you're using 100 pip stop loss, which is still almost one candle, you got to understand you cannot trade with large sizing. Otherwise, do the math in your head and calculate how much of that loss will be in dollars, if that's how you got to do it, okay? Sometimes if you got to increase your stop loss, 100 pips, 150, decrease your sizing. It's simple mathematics, okay? And that will help you from panicking. That will help you from getting emotionally involved when you're in the trade, if you're in drawdown, okay? This is a lesson to help you learn. Yes, you're going to encounter drawdown when you trade as a trader, okay? It's every trader goes through it. Not all trades are you're just going to nail it and right into the money and life is good. You're going to have to encounter drawdown while you're allowing the trade to develop. But while it's developing and you're in drawdown, you don't need to panic. If you've already calculated how much you're willing to lose, where you're placing your stop loss, and all the math works out, then just watch the price action and not watch your profit and loss and panic when you're in the trade. This, I know beginners go through this, I know, but once you get more experience, you're going to start to understand that you've already calculated even your profit. If I was to go in a trade, I'm calculating if it fills that wick, how much am I in profit? If it comes up there, what am I doing up there? I've already calculated. I could be in profit this much. Then I know to close out 80%, go to break even, close the trade if I'm happy. Understand that there's sellers here too. So I can't be greedy to expect it to break out of here, fill all those wicks, get up to here, break through there, and then continue to go through, fill that wick, then to go to the all-time high. Like, obviously, that's what we want when we're trading, but you can't always expect that, okay? Look at now. The candle came down, all the way down, higher low, flipped, turned into a bullish pin bar. We're still in this red zone. It's closing in 1 minute. So let's see if we carry momentum through to the next bar that can continue to drive, okay? But it could be one of those candles that just comes up and then boom, it's a big elevator coming down, manipulating this market down, okay? So let's see. Right now, it created a higher high, got a higher low. We're above the 200, above the 90 EMA. But let's see here, okay? Maybe we can continue buying with this. Guys, there's a poll on YouTube. Is gold going to 5,000 within the next 2 weeks? Let us know. Yes, it will. No, it won't. Or you're unsure. What do you guys think on Zoom? Do you guys think gold, after everything we've seen with now wrapping up kind of the Davos with Trump, do you guys think it's still got some juice to get up to 5,000? Or you think that's it? It's going to start to sell off now a little bit? It needs to gather more pending buyers to break through. Okay, so you still see we're closing in this red zone. Okay, so if you do take a buy, we're still in this red zone. There's a nice big bullish candle, okay, but we've had a lot of breakouts, back down, breakout, back down, breakout, back down. This could be another one, breaking out, could be back down. You got to set some rules when you're trading as well. Do you want to wait for the body to close so that we can, in fact, transition the zone from red to green? Or do you want to just go right now on impulse? That's what I mean. You see that? See that, guys? That's what I mean. That's, if you took that buy right there, it was a beautiful blue candle, but look at what they do, how they slam you down. Did I not just say, watch for manipulation? Rewind this video 20 seconds. Unks just said that. That's the reason why it's best to be disciplined for shit like that. And this is why my mindset is different from most traders. They'll say, oh, Ron, that was a beautiful bullish candle and it went. But again, I don't trade like that. I don't trade the woulda, shoulda, couldas. That could have been a blue candle and it's breaking out here. But when you have rules and you're saying, I'm going to wait for it to close, you got rules, okay? We had traders in our group post, they were in a sell on a security and they got large pips and they closed the trade entirely where there was a bounce and then it just consolidated and went down further and said, I could have held that trade longer and made more profit. But I could have just said, well, when it bounced there, it could have reversed and came after you and hit your stop loss. Like, we can't look after the fact, right? You got to be trading in real time. You got to make decisions in real time. Nobody cares about what could. I can share stories with you guys for the past 20 years of every single trade I took where I left money on the table, where I did this good thing, where I did that. They're just stories. We can have a beer and we can smoke a joint together and we can all talk about stories. But when you're securing money, when you're doing things good, that's what helps your mindset and keep you trading every single day. That's why helps me second guessing myself. This is what keeps me consistent for over 20 plus years, is just that mentality, right? You guys got to learn that. I hope you guys understand what I'm saying. It's hard to, I don't know. I don't even know how to explain it anymore. It's just, you got to make up your mind, guys. See, what happens if we took that buy? Look at that candle. That's what you call a fuck you candle. Sorry for the language, guys. I apologize. But it came right up there blue and boom, look at them slamming it down 130, 140 points. If you were over leveraged, your account is fucked right now. Okay? Those are facts. I'm not making this shit up. There's a lot of traders that trade over leveraged. That candle right there, they went in a buy, they thought it was going to break out, and they just got rocked. Okay? Those are facts, whether you like it or not. I'm not here to, I'm here to talk facts. I'm not Donald Trump here to talk stories and give you guys bullshit. I'm here to talk facts. That's a fact of that candle. You bid on that impulse, you got to live with the consequences now. Or learn. Wait for it to close. Why did I not take that bullish breakout? Because I had a rule, we're trading in a red zone. I know if I take that, it's on impulse. I saw what they did up here. Impulse, back down. Impulse, back down. Right there again, they baited those buyers in and they're slamming it down. So now we've got an M-top developing. Okay, there's the top, there's the neckline. It came up, they slammed those buyers, and now we're coming down. So will it break, make a new low, come back, retest this, and then drop all the way down to the green zone? Then if it comes down here, I got to know buyers are sitting, pending, waiting in here. So if I'm going to sell and I'm getting money, I got to be doing something down here. And I don't have this in my head. If I close my trade there and then it does this, I'm not worried, because the same shit, I can say the same thing. When it comes down there, it could break out and do this. So if you're securing money, stop being so hard on yourselves, guys. As traders, you got to learn not to be so difficult on yourself, because then it's going to haunt you the next day. You're not going to know what to do when it comes into a zone again. Trade with consistency. Don't worry about what could have happened, should have happened. Go back and learn from it, obviously, but don't be so hard on yourself where you forget the rules of the game. Trade the same way every single day. Do you guys understand what I'm saying, or am I just talking to myself? A lot of times I'm just talking to myself. Where you guys know, like, honestly, and if you guys don't understand me, I'm telling you, please learn what I'm saying. Otherwise, you're going to struggle as a trader. I know it sounds, your uncle's being an asshole right now, but I'm sorry, guys. I got to talk facts once in a while. That's what destroyed me for trading for 5 years. My first 5 years, I had no idea what I was doing. Second guessing everything, trading to no plan, buying impulses, selling this, selling that, not waiting for bodies close, no risk management, thinking I'm going to become a millionaire over the night. All of these stupid things, and I lost over $50,000. I don't even want to think about how much money I lost. That's why I get in, I pip, I dip, and that's it. I pip, I dip, I get out. Pip and dip and get out. Come close to my daily goal and get the fuck out of these markets. Last thing I want to look at is a chart when I hit my daily goal. I'm being honest. Some of you guys are going to understand why we do that. It's to keep you out of this. You can become addicted to this shit. This could be your online your casino if you don't know what you're doing. The markets would love for you to sit here and trade for 12 hours a day, because they know you're going to bite on that move and you're going to you're providing liquidity to the market the longer you're staying in here. If you're making mistakes, get your pips and get out. Have hobbies, do something. Start a business, go to work, go to the gym, go to make breakfast, go do what you got to do. Just don't sit and hang around in these markets all day, especially when you hit money, because you're more than likely you're just going to give it right back to the market. Then you go through that psychological mindset. I was just up $500. I just gave it back. Now I'm back to break even. I didn't make anything. I got to make something. Then you go in, you got the wrong mindset. You're pissed off because you bought that candle. Now you're trading undisciplined. You're trading reckless right now. You're on tilt, and then you lose another trade. Now you're in the red. Now you revenge trade, and then before you know it, you go back and you look at your day. You were up money, and now you're down money. You've lost money. Now tomorrow you got to go into trading, and you've just spent an additional 4 hours where you could have been done. It's this, guys. Trading is all mindset. Danny, if you're addicted to profits, then you got to learn how not to be addicted to profits. Then you're not treating it like a job. It's a casino again. I know a lot of traders that are addicted to winning at the casino. Okay, they're addicted to the money. Danny, if you're trolling, I don't know what it is with you, but you love to troll. But we're trying to help traders here. But I'm addicted to profits myself. Okay, let me talk facts. I'm addicted to profits myself. But when I hit my profits for the day, I'm done. I'm addicted to discipline as well. Don't be addicted to money, guys. Be addicted to discipline. Be addicted to adhering to your daily trading plan every single day. That's the addiction you should have. I'm not addicted to money in life. I need money to survive, but I'm not addicted to it. It's not gonna ruin me as a person. if I can't make money in trading, I'll go make money some other way. Okay, now, are we breaking below this? Are we closing below this neckline? See how it just came down? That wick did not do its job to take out that wick. So we have not created a new lower low in the market. That is technically a higher low. So there is buyers still. If I use that red line as a baseline and then I go into those wicks, I show it with this green box. This is now still showing there is still buyers here. But you see, guys, this is what I told you, where you got a 90 EMA and a 200 and all of this stuff all clumped together. This is where it's not the best volume to be trading in here. Okay, so if you're now, it could be a small double bottom here being created. Look, pattern recognition came down. There's the big neckline, came down second time. So will it build its way back up? But I know when it builds its way up, it's still below the point of control of that big bearish candle, 50%. Then when it gets up here, it's still trading in that big red zone. Then that's where they could smack it right back down. So like, is this a good area to be trading? Should we wait for more closure above here or sellers close below here? If you want to engage in a trade right now, you can, but just lower your risk. Maybe it might be a test trade, maybe a little feeler trade. Maybe you're interested in a buy. Maybe you could take a small buy, but if it comes up here and gets rejected and comes down, you can easily close it, and then you can understand that the sellers are in control right now. So there we came up, back down, spin top, not much. Now will the sellers continue to break these wicks? Still see it's holding still bullish here. Okay, I'm just going to check my spreads right now. And I look at the time. Every time, this is a habit I have. Every time I look to take a trade, first thing I do is look at my spreads. It's a routine I have every single day. Same shit over and over. I look at my spreads. Then I look at the time. It's 11:50. I know if I take a trade now within 10 minutes, it could be, if we're going into noon, it could be an hourly switch up, right? So all of these things are going through my head every single day. Do I take the trade now? Should I wait for noon? Are they going to maybe drop it down further, grab liquidity, then reverse it back up at noon? Or is it going to close below here? Then it will reverse at 11:55. Then noon, they drop it down. Okay, so these are all things you got to go through, especially if you're an intraday trader or a scalper. If you're a swing trader, you don't give a shit if it's going to close in the next 5 minutes and go into noon, because you're buying or selling and you're holding for an entire day or 2 days or 3 days or 1 week. The last thing you are concerned about is if it's 11:55 and we're going into noon. I'm speaking to intraday traders and scalpers specifically, okay? If you're a swing trader, what you need to be focused on is during the week. Monday, Tuesday is the start of the week coming after a weekend. When we move into Wednesday, it's called midweek reversal or midweek continuation. That's where you got to know what's going on. And then when you move from Thursday to Friday, you could still be in the trade, but you got to acknowledge that you're going into a weekend. Donald Trump could fart, and all of a sudden the markets collapse. And when you open up on Monday, you're wondering what the hell just happened. Okay, look at that. Okay, so if you bought, they're slamming it down. Okay, so now if I'm a buyer, maybe I wait for the bigger, deeper pending order zone. Remember, I have a white line here specifically for a reason. This is showing me hourly support, 4-hour support. If I just trade in here, I'm trading in no man's land on these 5-minute candles that are not just, faking out the market right now. And look at now, it's coming all the way down. So I'd like to see what will they do at this white line. Maybe I entertain a buy down in here. Maybe at that 4,800 right there. Remember, I cut that remaining bullish volume in half. There it is, okay? What happens if it comes down here and comes all the way back up and closes blue? And then you could see maybe at noon, they're gonna bring it right back up. Okay, so sometimes trading is just analyzing what's going on. Some traders just want to trade this candle, that candle, this candle, and they're failing to recognize what's going on. Okay, so the sellers are still in control of this move. From here down to there, coming back up, that's a lower high. Now they're pushing it down, but can they take out this to create a new lower low, or are buyers now stepping in and protecting this area from breaking down? Okay. I'm not in a trade yet. I'm looking. What are you guys looking for? Let me ask you guys, because I talk a lot on these calls. I want to listen to you guys now. And guys, we will get to silver, okay? But I just, we're getting into noon. We've been watching gold for this build up. So let's just see what happens here. Okay, you see how it came down, picked up. We've got 1 minute to go, and then 5 more minute candle, then we go into noon. Okay, look at that. Okay, so that was a big black candle that came down. Maybe they activated a lot of orders. This big bullish candle, 50% is right there, a little bit above, a little bit below. They activated in there. If you had a pending buy order, it got activated. Now it comes up, but there's still this black volume on this candle. Let's see where it will close. Trevor, POI 4820. 4820. Okay, yep. Yep, 4820. Right where the wick is. The EMAs now, you got the 9 crossing below the 200. That's showing like a bearish crossover that this could continue to push down. However, it could be like a false signal with these indicators as well. Okay, so we close back inside this zone where it was that previous wick. So still could be buyers. So I'd expect a blue candle to come through here. I'd expect a blue candle to at least break the high of the previous candle. Remember, a candle has its job to do. However, if it comes up and gets a lower high and fails, then the sellers could push it back down going into noon and close below here. And it might have further push down unless the buyers can do something. And then maybe at noon, we're reversing our way back up. Okay. Now, again, someone will say to me, well, Ron, this is a good return. We got a blue candle. Let's buy. That's fine. Test it out. Go in. Test it out with a small micro and see what happens. Like, just test it out. Sometimes you gotta test things out and learn for yourself. But then I want you to follow that volume going into noon and see where it closes, see if they fake you out, because then you will learn why Ron talks about the 11:55 going into a new hourly candle, because sometimes that's how the markets operate. They're there to, trick you, basically. And then what I do to not get tricked most of the time is I say, okay, I can wait 4 more minutes. No problem. It's not going to be the end of the world if I wait 4 more minutes. At least when I wait, I get full confirmation. Then I'll know exactly where it closed, how high it went, was it a fake out, all of these things, right? Now it's a beautiful bullish candle coming up. So did it break above that wick? It did, yes. So this candle is doing its job. So now we know that they grabbed some liquidity down here. We have a nice strong bullish engulfing candle, but still 3 more minutes to go. So we don't know where it will close. Maybe it will come up, close. Maybe noon brings it back down, maybe bounce off of here, because then this zone is accumulating with pending buy orders. Or we got to wait for it to technically close, okay? I know it sucks for live trading. I know it does. That's why we sometimes don't get a lot of likes or views when I'm just talking and analyzing the markets. Everyone wants me just buy, sell, get in, and but trading is analyzing. 90% of trading is watching, waiting. The easy part is hitting the buy and the sell button. That's the easy part of trading. But that's where you can make a lot of mistakes. Nothing wrong with being patient, disciplined, watching. If you miss out on a candle, if you miss out on a trade, it's not the end of the world. Don't get too hard on yourself. There'll be another candle you can trade. There'll be another setup. It's all good. You have to teach yourself this, okay? You know what I mean? You got to learn. Okay, so if you miss this, it's okay. I missed it myself. I missed that buy, but it doesn't affect me is what I'm trying to say. For some traders, it really affects them. And then they don't know what to do after. They're flustered. We've got now White House Senior Advisor Hassett speaking. Oh, wow. We might be looking at 2 GDP quarters north of 5%. Holy shit, okay? Donald Trump was saying 20% yesterday. Like that, they're just picking numbers out of the thin air, okay? 5% GDP is a lot. That's a lot. If you look at your own nation, 5%, okay? Maybe, who knows what they're smoking, but they might be high on their own supply over here. I don't know. U.S. Supreme Court appears likely to deny Trump's request to immediately fire Fed Reserve Governor Lisa Cook. Lots going on. Okay, so we got 60 seconds to go. We have a bullish candle. We see that they grabbed some liquidity down here where it broke. Okay, right there, that wick. Now it's coming back up. Okay, so maybe we need to close engulfed. Maybe there might be a small pullback. We got to tell by the size of the wick, right? And then we're going into noon. And noon is a new hourly candle. You can refer to your hourly candles. The hourly is still in a bearish trend. Big candle came down at 9 a.m., closed. Came up at 10, right into the point of control of 9 a.m., back down, created that new low, closed right there, came up, came all the way down, but didn't fill that wick to continue dropping. Now it's got that higher low holding, but still a lot of black volume. So if we're looking to buy, we're still going against this last 3 hours of a trend. But if we go all together over the longer term, yes, we're still buying with the trend, but we're scalping, right? So it's a little bit different. Okay, there's the close. It didn't close engulf. Now it's retesting, coming back down. So will it hold, like just hold and get ready to fill those wicks and drive, or will it come back down? Okay, so there it is, small doji candle holding, still above the green zone. I didn't get that nice close that I wanted, the blue candle close above this black one in that one. So now it's coming down. Will it hold right at the top of the green zone, right at 50% of the body, or will it come all the way down and is a black engulfing candle, and then it's got further room to drop and fill this wick down there? Okay, so right now it's still holding. Okay, now we're testing 50%. It's still kind of black, blue, black. It's in this like this tough volume to trade right now. Okay, black coming all the way down. And then this could be where it's just, like black, blue, black, and then come down like a 3-bar play and continue pushing down. But it doesn't have that short wick. It's got a long wick. So it could come down black, 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 and then to this red line right there, and then get a wick and go back up. Okay, so maybe we wait to see, will this black candle close below this green zone? Then we got a bear flag pushing down. This is an impulse if you do take the sell, if you like it, right? But you can wait 3.5 minutes. That's up to you now. Okay. If you got the feeling that they've faked out the buyers and they're ready to drop it down, you go in for a sell. But you've got a big wick to fill, which it could do at the new hour. This is now noon. Okay. Otherwise, we wait for this body to close. If it closed like this, we flip this green zone red. Maybe we allow it to come back up. We catch the retest, then we sell, right? This might be one of those candles. I should have took it. I would have took it. I could have took it, this and that. If you didn't, just now your next thing to do is not sit and think about what you should have done. Your next thing is to wait for it and see where it closes. Gather more information, okay? There's always going to be scalps that you're going to miss. But you got to stay focused and continue looking for what you're looking for. It came down, picked up a wick, came back up, dropping back down. Where will it close? Below here, above here. Will it fill that entire wick and keep dropping? Remember, better buying opportunities are inside here, right? I don't know if it will come down here. This candle needs to continue to do its job, but still bearish, okay? So if you bought right away on that small doji, again, you got trapped. I'm not saying it to be an asshole. I'm just trying to break down each candle here. Okay, and I get it. I could have bought there and I would have made a mistake. But I would have placed my stop loss maybe below this red line because I don't want it to completely bleed out. I could have a stop loss below here, right? But, I didn't take the trade, so I don't need to think about that right now. Look at that now. Wow. So you see now, just let's review. 11.50, they came up. 11.55 was a nice bullish candle. Got you thinking about a buy, and then they open it at noon. And then look at what they do. They're coming all the way right back down. Okay? So That's what I was saying, guys. If you're thinking about a buy right prior to noon, this is exactly what could happen. That hourly volume coming in. Look at that. See, that's a deep candle breaking. Okay, so it's basically filled that wick now, and now the last wick is right there. This 4813 right there, right above the hourly. So if you wanted to buy up here, look at the discount you're getting now. Okay, if you wanted to buy up there when the candle opened, now this candle is 150 pips. Holy shit, these are massive candles. Okay, if it comes down there, it's a 200 pip drop. You're getting a 200 pip discount to buy down here where you wanted to buy up there. Okay. Now look at the wick on the daily. It's getting real, it's dropping, but right here, now we're entering a buying zone. So we're not just in this Mickey Mouse 5-minute area. So they did produce a new low, right? Let's see where the volume will close now. 25 seconds. If it closes below here, this is a red zone. Okay, so here's the close. So it came down, produced a lower low, didn't get, take out that low, didn't come in the green box yet, but closed right above 50% of that candle. So that is now red. The black candle verified to us that it closed below. So we've got resistance there. We're now, got the 9 crossing below the 200. What if it comes in, retest this and gets rejected? We could be selling back down, all the way down, right? We might have to continue selling with this, but then we got to be careful when it comes in here because it could come in here and that's the bounce. Okay, so open blue didn't come up for the retest yet, so it still looks like it's ready to continue to push down, but it's got 2 wicks to fill. And we're trading at like 48.25, that kind of psychological area, 48.25 there. Okay, so it's turned blue now. Will it come up to retest? Or is it still this small little doji candle that's just kind of consolidating right now in a small range? Like we've had massive candles and you see this little tiny one that's barely moving. Now we get the bullish volume coming through. Okay, so now what we look for is a retest. Okay, 50% of this bearish candle, halfway is right there. The red zone is right there. There's your 9 EMA, there's your 200 EMA. So there's still resistance. Now it's coming in. So even if you buy this candle, you're still counter trading, but then it's got to come all the way up and maybe close above here again. Maybe with more closing above here, we'll make this green. Then the next bar might be the blue one breaking out of here. So this is now, it's retesting this zone. That black candle came all the way down, closed. Now it's coming up to retest. Let's see if it gets rejected here. Okay, so far it's got a wick, getting rejected. Didn't transact in that red zone yet. Guys, I will get to silver. But sometimes you see when we get into the charts, we're breaking down plays. So sometimes if we go right to silver, we might miss a critical move. But I will do a silver top down, no problem. Okay, so there's the rejection. Okay, we see it came up. There's the showing. The wick shows the rejection. There's still the blue volume in the candle. Can they come all the way down? Then I know it's a short wick on this candle. Then if it flips, it could be bearish filling all the way down there. Then I have to be very cautious when it comes in the green zone. That's where if I'm in a sell, I might need to take some profit out because that's where the big buyers could be waiting, right? Me as a seller, if I go in a sell, I got to know that, okay? However, it's coming right back up, okay? See, this is tough volume to trade. Remember last night, you could basically close your eyes and buy pullbacks, and trading was real simplified last night. This is now a little bit more difficult, in my opinion. Maybe you guys think that this is easy price action. In my opinion, this is difficult as a buyer or a seller to kind of predict where we're moving. It's not easy. There's now, again, rejection. That was another. Did you look at the second time it was coming up? Okay, so it came down, it came up powerful again, and then the sellers right there, exactly halfway, pushed it right back down. So it's telling me something. Okay, so not just one time did it come up there, but it came up 2 times up there and got rejected. So it's still showing that there is still sellers here offering to the buyers in this bar. But now it's coming up like a 3rd time. So it's still like refueling itself. Buyers are asking to trade up here, going into the close with 1 minute. Okay. And then it's kind of just consolidating in between here, right here. Trevor looks to be setting up for buy or setting up for continue sell. If you can just be a little bit more specific. Thinking sell. Okay. Yep. It could be flagging down here to continue to push down. You're correct about that. Analysis spot on. Yep. I agree with you. But it could also close strong up here and then start that next leg coming back up there. Then maybe, Trev, that's where the big sellers are in that to really push it down. Okay. But it could see how it came up there again and then they rejected it back down. Now we're going into the close. Let's follow this momentum going into the close. Okay. So they rejected it back down, still got some blue volume coming right back up. So you see where it's consolidating. Next bar, again, open black. It could flip blue. Here's blue, went back, black. This could be that 3-bar play ready to drop just like here. Just like same setup right there. Okay, where it was black, blue, and then they dropped it. Here was black, blue, and then it could be black coming down and then filling that wick and dropping even further. This might have to, you got to tell yourself maybe you're taking an impulse now. Okay. Otherwise, you got to go through the drill and wait for the body to close again. So if you believe that this is a bear flag, it's got the M tops coming down, you might have to pull the trigger if you want to go in for a continuation sell. Okay. And then just place your stop loss either above the red zone. You might get tapped out there, maybe be above that wick, and then you're protected by the EMAs as well if you follow those. Okay. But we're still, look at the volume. It's still in this tight consolidated zone. Hasn't broke, coming back up, buyers are there. They could definitely push this thing right back up. Okay, now it's coming down. Okay, coming down, wick. 3.5 minutes to go on this. The Kramer show, do I consider volume when I'm trading? Absolutely, absolutely. Like you can see the volume in the candles. I mark off the bigger base candles, the bigger volume based candles, and those are the ones I like to trade off of, right? You have to incorporate volume in your trading. Okay, see, it's a 3-bar play, that Tetris piece trying to break down. So it's got a high probability it wants to continue to push down. It's got a big wick to fill, so it could come down, get a wick, come back up. So that's why you got to place your stop loss at an appropriate area. And look at where we're trading, right at that 4,825. Okay, so this is the break now. Oh, shit, I missed it. Okay, I should have pulled the trigger. I should have pulled it. As soon as that 3-bar play was breaking that wick, that's where I should have been in the sell. And I would be up 50 pips right now had I done it. I didn't. Okay, now do I want to just chase the bottom? No, because we're getting too close to where the buyers are. Okay, I missed my opportunity. As soon as it was coming down there, as soon as it broke that wick, that's why you got to be super, super efficient, super fast. You got to know exactly what you're looking for. I missed it. To me, it looks like I missed the trade. The way how I scalp, I missed it. Okay. And that would have been nice little 50 pips. Like right there, when it broke the wick, just drop 50 pips. Could even go more, 70. Like that's what I mean. You got to understand, there's that setup. There it is. It came up into 50% drop, opened, and then there it was. I just didn't pull the trigger. Shit. Sometimes I read the chat and I'm upset with myself right there. That was my bar. I waited through all of this shit to get rewarded on that candle, and I never pulled the trigger. But this is what I cannot do now. Now get upset and then sell the bottom down here. Because then when you do that, you're selling where the buyers are, and then maybe the candle gets a wick and reverses back up. Okay, so if you miss it, you miss it. As a scalper, you got to wait now. Got to wait for your next setup, next candle. I hope I'm making this clear to everybody. I know it sucks. I missed it right there. But what can I do? The movements are fast. Okay, so now we tapped back into that zone right there. That's what, when it tapped in there, that's what started that bullish leg coming back up. So is this now the double bottom of this bigger move? Or does it have further room to drop deeper down into here? Possibly. It's got lower lows, lower highs, bearish volume following. If it closes below here, it could continue to come down. And then I know that's a white line. That's an hourly support. That's a yellow line. That's a daily point of interest. Psychological 4,800. Then I know it's transacted right through that entire green zone. Maybe it picked up a shit ton of pending buy orders. And then it's ready to reverse back up. You got to be very selective as a scalper. You got to be very selective as an intraday trader, very selective on your trades as a swing trader. And see, I missed that. I know, maybe you guys don't believe me, but I know what I look for when I'm trading. I missed that. I could be very upset right now, but what's that going to do for me? What am I going to get by being upset right now? Nothing. So I got to remain calm. I got to remain focused. I missed that. Okay. Now I just bring it to my cut line down to represent 50% of that candle? Yes, this candle opened ignited. So I know when a candle opens ignited bearish, it wants to continue to push down. So now I'm looking, will it break that low? Will it be a new lower low? Will it be a higher low? Or will it be equal lows there? Okay. Will it come down deeper at that white line? If I'm looking for a buy, right, deeper in the depth of market, but this is a bear trend now I'm buying against. So it came down, like even if I'm looking for a buy, look at it came down one move, one wave down, A. There's B, counter up, lower high, and this is C now. We're 1, 2, 3. Will it break down there? That's where maybe it comes up and does something like this, right? Okay, so it's still bearish ignited. Okay, now it came in here. This candle could flip and be blue and trade all the way right back up to 50%, then get rejected back down, okay? Should I wait for a blue candle to prove to me or just go in with this? That's a choice that you have as a trader, okay? Or, you know, it could come up, go back down, go down deep down even further, okay? But you see how it came in there, tapped, now it's reversing back up. So you gotta make the decision. It's a hammer candle with 3 minutes to go. Should you go buy time now? You can. Then I would suggest placing your stop loss below the hourly or somewhere deeper down in here in case it comes down further. Or we wait for this blue candle to show me that it can close above 50% of this and build off of this. And then I could take a continuation buy. Because what happens if it just comes up right up to here and gets rejected back down? Just like this blue candle. Came up, rejected back down. This one came up, they rejected it back down and continued. This one could come up too, rejected back down. Next bar again is black coming deeper down. Okay, but the only thing that is strengthening a buy here is it's the double bottom. You got it, Justin. Yeah, the double bottom right here. That's the only thing that makes this more of a stronger buy opportunity, is the second bottom is still holding. Okay, but now when I kind of make the consolidated area, that red line to this, that's where maybe I got to watch and see how the volume builds in this quadrant right here. I know I'm talking a lot, guys, but I hope it's making sense, because even if I just go on and buy, I still know I'm counter trading, right? So there's nothing wrong with waiting for confirmed volume. Just because it came down here doesn't give us the automatic right to just buy. Got to be patient. Like I'm saying, let the buyers prove to me. At least close it above here. Be this blue candle and close above. That then shows me buyers they can close it above this point. If they can't close it above there, the sellers still have they're still in control basically. Okay, now they're coming right back up to exactly 50%, where I kind of just, put that cut line. Now we've got 90 seconds to go into this candle closing. So can the buyers at least close it above here? Has this candle done its job, where its job is to continue to break a high? No, it hasn't yet. So it could be another spin top candle consolidating, and then one more big black candle could be the liquidation candle that kind of liquidates all stop losses. What about these buyers over here? Think about these buyers. Their stops are down here, right? They wanted a bigger move. Maybe they got greedy. Maybe they wanted bigger. Maybe they wanted gold to go to 5,000. So the market knows that. Right there, look how it came up. Exactly right there, spin top coming down. So, and if you bought that and you don't do anything there, unfortunately, you're back to maybe entry or some drawdown, but you got to let it build. It's got to have a building phase as well. That's why a lot of traders panic when they go into a buy. They over leverage. It doesn't do what they want, and it comes back down, and then they start panicking. Okay, so 30 seconds to go. Let's watch who has momentum going into the close. So the buyers are bringing it right back up. Maybe we'll close. Next bar could be bullish, filling up to this red zone. Right? These zones are still stretched out into the future. Okay, so now we have a double bottom so far intact. We can put a check mark there. Let's follow the closing volume. Okay, so it closed basically right at 50%. It will have one more pullback into, even I can cut that blue candle. I know it's not a bullish engulfing, but still, if there's a small, minor, shallow pullback, I want to see, will they pick it up right there at 50%? Or if it doesn't pick up there, then I know it could be a black candle engulfing coming all the way down. So far it's holding. Okay, I'm going to buy this candle. I'm buying off of this. Okay, I didn't get the pullback I wanted. I'm in a buy now. The double bottom, we closed right at 50%. So what I'm looking for is, does it have enough buyers to ask to trade right back to the point of interest of that black candle? And then these two bars can basically engulf that, maybe push a little higher into the red zone. Let's measure it, okay? If it does what I want it to do, okay, just to get up to the bodies is 40 pips, just right up to there. If this blue candle can just get up to the bodies, that's 40 pips. I could right there go to a break even, you know what I mean? And then if it can just break a little further to fill that wick, that could return 60 pips, but I still know I'm counter trading, okay? But if it comes right into that red zone, it's 75 pips. Like right now, it's in profit a little bit. I can see on my profit loss, but the stop loss, this was just the generic stop loss, going look for a 1-to-1. So it's below that red line, okay? You see, I'm just below there, my stop loss. I could give it more room to breathe if I want this thing to play out. Like, if it comes back down, allow it to accumulate. Maybe that's what I'll do. Like, and then I could be looking for a bigger reward, right? Maybe to that, okay? But let's play it out how we've been doing this. Bar by bar, candle by candle. Let's see what happens. I'm in a buy, okay? I want to see if this double bottom is legit for real. I would have loved if it came a little deeper, but I could miss this leg that breaks out right now, okay? So let's see. Okay, and then I'll use another ruler just to measure the current volume. Okay, so we moved up approximately 25 pips, okay, to the wick. Okay, so still a lot of time left on this candle. Less than 3 minutes, lots of time. Again, it could come up, get rejected, and go back down. Okay, we haven't tested into that red line, the cut line of the previous bull candle. Okay, so it's still holding. We've created a higher low. We don't have a new higher high as of yet. Our body is still filling. So target is right here. Like if you guys want, I'll put a red line. Like just to get back up to that opening price of that bearish candle. That's the resistance. 4827 and a quarter. Okay. So let's see if this candle can do its job and get up to at least to the bodies. Then I got maybe if it can close above there, then it takes two bodies to engulf one big black body. That's called like a piercing line pattern with two bars. It couldn't do it in one candle to engulf, so it took two candles. That's called a piercing line. The opposite when it's bearish is the dark cloud cover candle pattern. Those are two bar patterns that you should be able to recognize. Okay, but when it comes up there, look, sellers are still there offering, pushing it down with a lower high. So it's not going in my favor right now. What I want out of this, what I want out of this candle so far. If I was just scalping the 1 minutes, I could have just pipped and dipped right out of that candle, grabbed 20, 25 pips, closed it, look for another one. 4 by 25 trades a day is 100 pips. With today's volume, you could get that no problem, right? But if we're looking for an actual move, we got to let this thing cook a little bit. We got to let it materialize. Maybe it will come back down in drawdown. See, it puts me in drawdown, but maybe this is where the real double bottom will take place, down in here. I haven't over leveraged my position. I can withstand some drawdown if it comes down here. I'm not risking my entire account. I'm not risking 5%. It's just 0.25% of my 1%. So I can still figure out what's going on. That's a nasty rejection, not what I wanted. Okay. So this is another thing. Holding trades. Do we just hold? If we don't get what I wanted, if I don't get the close and it came down there, I could just cut my loss right there and get out, because then I'm saving my pips in case it comes all the way down there, right? You got to be selective with your trading. Now it's coming right back up, 30 seconds to go. Will it come and break a new high and get back up there? Maybe I can cut this bar in half, okay? See, now the buyers are coming in near the close of the candle. It's still getting up there, okay? So remember, it's counter trading this big bearish candle, basically. Okay, 9 seconds to go. Got to follow the close now. Okay, how much of a wick did it leave behind? Quite a substantial wick, right? Okay, so if I just move slowly up with 50% of that blue volume, see how it opened, retested already 50%. So now we should see or, fill that wick and get up to that red line. However, if the sellers are there and they say, no, it's not happening, there they are. See how they reject it with the lower high? Now it's coming down. It could be a bearish engulfing candle, come deeper down into here. Or will it just continue to accumulate at that point of control, 50%? No, it's a big bearish candle coming down now, okay? So this is where sometimes, if I don't like the setup, I close it right now. I lose 10 pips, 15, 20 pips if I don't like what I see. Otherwise, you got to be able to withstand it and hold it. Now, where did the wick come in? It came in just above where the body opened. So they're still showing me buyers are still holding, but this is some big selling pressure coming down. So we haven't tested 50% of this blue candle below us. Remember that first one? Okay. So now it's testing it. Should see a wick there. If there's no wick, then you still see how strong this selling momentum is. And if it's not at these bodies, then it's coming deeper down into here, okay? So I'm in drawdown right now, okay? Just full transparency. I'm in drawdown now, okay? But now I got to continue to focus and see. I didn't close the trade in profit. I didn't close it when it was coming down there. Now I'm in drawdown. How do I go about this? What do I do about this? Okay, if I allow the whole trade to play out, I'll get stopped out down there. But right now I got to see. There's a wick. Where are these buyers? Where are they? When will they come in? Okay. And it just shows you how I'm going against a trend. I'm counter trading, but I'm looking for where these buyers came in, the bigger double bottom, and they are not present. They are not here. Okay, I got a lot of cut lines. I gotta get rid of a lot of these red lines. Sorry, let me just get rid of a few of these. So there's a wick there, a wick there. Can this produce another wick in this area? And we're approaching 12:30 in the next 2 minutes. So a new 30-minute candle is going to open. Okay, so we have to factor that in. Okay, so it got a wick. Can it come back up, or is that offering going to come back down? That's what I'm afraid of. That big push down. So I got to wait for this candle to close in 2 minutes while I'm in the trade, while I'm in drawdown. I can't help that it didn't go higher than that. That's just how the market is. It's showing that that's where the sellers are. They're still offering on this play. Lower low, lower high, lower low, lower high, lower low. It came up, but that's what I mean. Learn, guys, how that candle failed to do its job. It did not come up and at least transact at those bodies or fill the wick. So it came up, that's a lower high, and then the next bar was a big black candle coming back down. But now it's transacting deeper down into here, where there is somewhat buyers down here, but still, it's a big black candle. And then we're going into 12:30. So it could be liquidation time, where big black candle comes, liquidates all the stop losses, not just mine, but maybe these longs over here, take the liquidity, and then it comes back up when it approaches maybe 48.10, maybe 4800. However, if the buyers are here building, we should see it build its way back up. Not there yet. $20 seconds to go on the close. So there is a wick, there is a return, but still big black engulfing candle. And we're going into 12:30. So get ready. There's going to be some volatility happening at 12:30 now. So it's coming up. Let's see where the close is. Close, open, black, ignited, pushing down. Will it fill that entire wick? This is 12:30. Yes, it did. Okay. Will there be another wick in this area? Wick, wick, wick. Will there be another one? Will it build here? Is this a building zone right around 48.15, 48.16? Buyers have gone grocery shopping. Yeah, maybe the buyers on last night on gold are out and they've taken their money, possibly. So gold has more room to drop. Absolutely, I'm not against that. If you guys are selling it, I understand it is selling. I'm just testing out this double bottom area to see if the buyers are here more in this location, which they're not. You're right. The buyers went grocery shopping. The buyers took all their profit last night and they're out. Sellers, make way for the sellers. Okay, but I can't get stubborn in this trade and like add more buys, right? That's what we tend to do is add more buys. We get upset. And I'll let you guys know as soon as I get stopped out. I told you, liquidation candle. These things happen at 12:30 on the hours. I got stopped out right there. See? Liquidation candle. I got liquidated. I offered liquidity to the market right there, okay? Because I got caught in this thinking that this is going to be the double bottom. It was moving up, but didn't get that close right there. When that black candle came down, now looking back at it, this is why I review my trades. Win, losses. I took an L. Put an L in the chat. I don't give a shit. But what I do is I learn from my losses. That's why sometimes when I trade, I'm not going to, like, you guys probably do not believe me. So I hate talking about this. But when that candle comes down, it didn't do what I wanted it to do. And then sometimes I close it. If I do it on these live calls, everyone's going to say, Ron, why did you close it so early? Maybe that's what I need to start doing on these calls, is that did not do what I wanted it to do. As soon as it came down, right there, I told you, I could have lost 20 pips and instead of losing a full stop loss. Some people understand it, some people don't understand it. And that's being stubborn in the trade. That's what that is. That's being stubborn. When you trade candle by candle and the candle doesn't do what it wants to do, you don't need to sit in the trade forever. Okay, now, is this thing coming all the way down to 4,800 to that psychological level? If it closes below there, that 4,800 is resistance. And then it might pull back into, this is a big body candle, cut line could be right there, comes back up, and then they slam it back down. So then you got to maybe continue selling. Like you got to avoid buys. This is what I mean. Sometimes you get in the habit where gold, like last night, you could close your eyes and buy every single pullback. How is that working today? If you bought that pullback and you didn't do anything, you just got stopped out there. If you bought this pullback right there and you didn't do anything, possibly stopped out. If you bought that blue candle, stopped out. Right there, that leg that I just bought, stopped out. See what I mean? So sometimes it's not always the best idea to just go with what you think the trend is just because the previous day or how gold's been trading the last 2 weeks. I told you they could flip this right away. Next 2 days, 3 days, gold could drop back down to 4,500, 4,000. And if we keep buying dips, we're getting our accounts blown up. To me, it just didn't hold. Normal day, it would have pushed. I don't know. I don't even know what to say about that. What do you mean, like on a normal day, it would have held? It just didn't hold today. That's what it is. There's more sellers than there is buyers. But I don't kind of look at it like that. I look at it, this candle did not do its job, right? Its job was to get right up to there. It didn't do it. As soon as it got rejected, and then I saw this candle open bullish, did not even fill the wick, it didn't do its job. As soon as it was coming down, that's where I should have just got out, not kept my stop loss, accepted the 20 pip loss. That's an L too. But you see, now I gave my whole stop loss to the market. But it's learning, guys. It's learning. I had to learn every single day going through this. I'm sure that this is not the first time you've been stopped out of the markets, but I learned. If the candles are not doing what I want them to do, there's no reason for me to still be in the trade, right? When it first opened, remember it went up 40, 50 pips? Again, I didn't close out. I didn't go to a break even. I didn't take partials. I completely went against my trading rules. Why? Because I opened up my reward and I gave a bigger stop loss. So that was what I did there. I wanted a bigger reward. Therefore, I opened my stop loss and I let the trade play out. That's what, when I look at my thought process behind that, why did I do that? Why did I give a bigger reward and open my stop loss? I shouldn't have did that. I should have just traded pip and dip, pip and dip, pip and dip. Get in, get your pips, dip out. I could have now been buying down here. Like there's so many things that I could have done that I screwed up on this trade. I was originally in profit, could have pipped and dipped, right? Or done 80-20, break even, then the break even gets stopped, no problem. But down here, I could have been buying deeper, almost at 4,800. It tapped in there. I could have been in a buy on this candle, up again, 50 pips. So you see the thought process, how if you hold a trade, it can go against you and demoralize you from your next trade and your next trade. Okay, but I don't stop, right? I take an L. It's not my account is blown. I lost 0.25%. It's not the end of the world for me. Maybe for someone else, that's a lot to risk. I find that it's okay for me. So I can continue to follow this volume. Now I know we're trading in this deep green zone. This is where obviously it's green for a reason. So this is where technically the buyers should be. So can they bring it back up and close above here and build this? And maybe it will come back up, okay? But I don't want to just buy this blue candle just because again, look, it could just come up to halfway and then they slam it back down, right? This is why if you have it set in your head that you always want to buy and you're buying against a trend going down, you could screw yourself over, okay? This is where you have to kind of flip your mindset and become a seller. Like, look, if we sold after that blue candle, we made money. If we sold this come up, we made money. Unfortunately, that one, maybe I should not have bought that double bottom right there. I should have been selling right there. When it came in, sell, I make money. Even this blue candle, it's if you buy it, it could continue pushing down and then you're in trouble again. Today's volume is very, very tough. It's difficult. From everything taken from the past few days where gold was basically you buy any dip and it goes up. You see now how it's not working. So this is where trading gets difficult. That's why I had that conversation with that trader that told me, Ron, I just started trading the last 3 weeks. I've been buying every gold I've been buying every dip on gold. I passed a couple of evaluation counts. I'm doing great. But today, that mentality is tough to do, right? So you kind of got to adapt with how the markets are moving in real time, your particular time frame that you're trading. You're gonna make some nice trades. You're gonna take some losses. You're gonna learn from it. Hopefully, you go back and review, and you learn. And you just don't over leverage or over risk while you're doing this. It happens. Justin, that's very important. I'm going to reread what you just wrote. Try not to have a bias and pay attention to trend and structure. That's like how I scalp in a nutshell on the 1 minutes. On the 1 minutes, I'm not really worried what the daily trend is. I might be in for 1 or 2 or 3 minutes. Okay, whether the trend is bullish, bearish, I might just be looking for just like if you go to the single minutes, like there's a lot, like right there was a trend going up. Just right here, there's just this bar, that pullback right there, and you sell that one, boom. So there was a trend going up again, trend going down, trend going up, trend going down, trend going up, trend going down, trend coming up, all on these 1 minutes, regardless of what the daily trend is, okay? I'm sure it was bullish at some time. The 1 minute candles came up right there, back down, came up, back down, came up, back down, came up, back down, came up, back down, regardless of what the daily trend is, right? But sometimes, when you have a bias, it throws you off because we're stubborn and we don't want to give up our bias, and we'll trade into, we know, like right now, like I know we can be buying right here, but I still know that it could be coming down, but it's just where it's located right here. We're so close to that daily point of interest, 4,800, and it's building now. So this is where it kind of came and liquidated all of this stop losses, including mine. I was in a buy, my stop loss. I'm sure that these traders, maybe they're not intraday traders. Maybe they bought here at 48.15. They were looking for gold to come back up to, trade up, back up to the highest point of the day, or a little higher than where it fell off right here at 9 a.m. Okay. And I'm sure that, I don't know if their stop losses were that tight, but you can see how it comes down to liquidate. And now it's pushing back up. Okay. So this is where we could fall in the trap again. We could definitely start buying right now. It closed right there, 50%, another bullish ignited candle, and we go in a buy. And it could just continue to do this. Come up again, fail to break these highs, and then sellers are in control, pushing it right back down. I'm sure they know that there's a lot of liquidity below 4,800. Take out that low, come down there. If you buy, you get stopped out. I'm sure of that. That's a 150 point move, 200 pips down there, stops you out. Then this block turns red and gold is still dropping, right? And then now, if I just stay with my bullish bias, like you're still counter trading. Like this is where this type of volume is difficult to trade, or if you're counter trading. If you've been selling with this, you're doing fantastic. You got the right motion of the markets. You're riding the right wave. But for some of us that have a buying bias, you can see how it could destroy us. See how that came up again. Pretty much the exact same setup as these two bars, where it came up 50%, open bullish, and drove, but failed to get up to that body right there. And then sellers come in and start dropping it right back down. Today is a very difficult session. Even breaking this stuff down, it's not easy. I know some of you guys came for the silver charts. Let me just do a quick top down on silver, and then I'll revisit this gold in a moment. Let's just do silver really quickly. I'm going to go through this a little quicker. I don't personally like scalping silver. I don't have the best spreads with this. This is not for me for scalping. Silver is more for swing trading, guys, but I'll break it down like I normally do. So the ticker is XAGUSD, silver US dollar. This is how it's trading on the 5 minutes. If you go start on the daily, okay, it looks very similar to gold, made highs. There's pivot points, there's zones, everything you can look at. There's blue candles, black candles, blue candles, black candles, everything you see here, okay? Is there some critical zones that we can identify? like right here. Okay, see what I'm doing here? So figuring out a kind of demand zone where it came right to the bodies, kind of consolidating all of that volume, making it green. Okay, so now we got to use psychological numbers. We know that silver's all-time high is up here. Silver has never been up here. Okay, so 95, almost just below $96 is the all-time high. Do we have some daily pivots of interest? Yeah, there's interest points. Okay, right there was a pivot. See where it came up? It came down. Yes, I see the wick. But that's where the body closed. They gapped it up right there. So there was a gap up. Closed there on a Friday. They gapped it up on a Monday and continued to drive to the all-time high. Now we're coming down. So if this black candle today or tomorrow closes below here, that this yellow line, $89.50, can turn from support to resistance. Sellers could continue to fill those wicks and drop it all the way down here. If you're looking to buy silver, maybe $80. Somewhere down in here, $75 to $80 in this block. Maybe it has to come down there. Maybe it just trades like this. Up, down, up, down, up, down, and then break out, and then we're in a big bull flag and continue to break out. Could happen, right? What I would be looking at now is this was a big bullish candle on Monday, start of the week, closed above all structure. Let's just identify where half of that is. We're trading right into it right now. There was the gapped up open. Okay, opening price, closing price. 0.5 is right here. Okay, can I figure out maybe a little point of control? Okay, we're trading right into it right now. Okay, will it hold up or will it continue to be bearish candle closing below? Okay, on today's market, today's candle. Okay, so you see we tapped into it yesterday. It returned right back up. It flipped. That's how we got the all-time high, came back, closed as a bullish spin top. Today, where's the opening, closing price? There's the closing, there's the opening. $94.40, give or take, whatever. Then it opened, it was bullish, but you see, even a daily candle didn't do what what I was showing you on the 5-minute candles. Today's job of silver's bullish daily candle, open bullish, its job was to continue to fill that wick and break for, in this situation, a new all-time high. Okay, it came up there and you see it failed. Okay, we can give today's daily candle an L, just like I took an L in trading. Today's daily candle took an L. It came up and it failed to break. There's a lower high coming down. Okay, so the sellers now are protecting yesterday's all-time high, are lowering offers. There's the lower high, pushing it down. When it came to the opening balance, the buyers are not there to bring it back up blue and fill and break. They failed. They've lost their opening balance. That clears the way for sellers now to fill. Look what they're doing. Filling yesterday's backfilling. Did they do their job? Yes. Did they break yesterday's low? I'll identify it with a yellow line. They did. Fact. Break yesterday's low. Drive into there. Now you see it's just right above 50%. Now the buyers are coming in this block, like kind of how I bought that double bottom. They're getting activated, coming up, but we still have big black volume that could easily come back down today and fill and drop even further down. Okay, so if it fills and drops down, see where I have it right there. Maybe I go to the opening balance, the gap up, $89, just below $90, $89.90. Right there, okay? And then that's where maybe buyers will be, okay? However, if it comes up, now we're in consolidation. So even if I'm scalping today's silver candle, I could just look at the balance from where it is right there and cut it in half. That would be my halfway point right there, okay? If I know I'm going in to buy and it comes back up, and I don't do anything there, that's where it could technically come right back down. Just like how I did on that gold trade, where it went up right away 40 pips. Same thing. If I'm trading a daily candle and it comes up there, it could be 400 pips, when you're using a higher time frame. And I don't do anything, it could come right back down how it happened to me, and then my stop loss is down there, and then I get stopped out. And same situation, okay? But right now might be just a cool off day. Okay, that was a cool off a couple days. Then it pumped right back up. This might be a cool off day. It might accumulate and continue pump right back up. But technically, it's a bearish daily candle right now with a lower high, lower low, bearish volume. 4 hours to go into the close. Let's look at the 4 hours. Okay, so this was silver coming up. That was an all-time high, came back, built up, couldn't break again. Failed opportunity for buyers to break there. Then the sellers came back down. Buyers brought, there's a double bottom, bottom, two bottoms. Second bottom traditionally has more volume. It didn't happen on my trade that I just took. That was the double bottom. Traditionally, it didn't have the more volume. I got stopped out. It happens. That's what I mean. If you can recognize a pattern, it's not always 100% guaranteed to happen. You know this, I know this, okay? But just don't over leverage when you trade. That's it. If you take a loss, hopefully you have not blown up your account and maybe you can recover on your next trade, okay? Or tomorrow you trade, things like that, okay? Taking losses in trading is natural. It's normal. If you never take losses, then you should be on Wall Street. You shouldn't be a retail trader. You should be teaching guys on Wall Street how to be trading, the professionals. Okay, so the 4-hour candles, now I can see all-time high coming down, like it came, look, up, down, up, and then here's the second leg pushing down. Even the 4-hour candles are doing their job. They're open, it failed, look, failed to get up there, 4-hour candles, lower high, lower high, lower high, pushing all the way down, failed to fill that wick, close. Look at, if you cut that 4-hour candle, 6 a.m. in half, found the point of control, you see silver also bullish, 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 right into there. If these buyers got trapped today on silver too, our swing traders, they're trapped right now. They bought in, and look, it came right into the point of control. Sellers are there, did their job, filled the wick, continued to drop it all the way down into that zone. Now it's coming back up with bigger buyers. But it could, this is going to close in 1 hour and 10 minutes. If it closes below these bodies, it could break right through the zone. However, now it could be building, okay? But I would like to see on 4-hour, if I was a swing trader, can silver come back and close above this yellow line and then maybe consolidate here? Then it has its bullish move to fill that wick and get back up here. But it's still coming down, okay? 4 hours look nasty, like all this spin top, spin top, spin top, spin top. This is nastiness. But you can still make out a pattern where it came up, down, up, and then down. Okay. So now is it holding in here? Will it return back up in here? Do something like this? Maybe new all-time high. Maybe come in here again, and then that's where they slam it down. Sorry guys, I'm losing my voice here. On the hourly now. Trump is speaking right now. Well, who knows what he's saying. Hourly, okay. All-time high, back down, retested, daily high, back down, came up again, could not. Look, the hourly candles are not doing their jobs, filling these wicks, creating new highs. It opens the door for sellers to come in, but sellers can't break it below those. So this is where you get a range, up, down, up, down, up, down. Finally, here at 9 a.m., you got a big bearish engulfing candle. Hourly at 10 came into 50%, continuing new low, big rejection coming out of there at 10 a.m., but no follow through. Next 11 a.m. candle, blue, 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 again, didn't do its job, failed. If you're like in a buy, that's where sometimes you can close out the trade. You see it failed. That's what I was trying to talk about on my 5-minute trade. When I saw that it failed, like right there, I was saying I could have just taken a 20 pip loss and regrouped. But I left the trade to run with a bigger reward and bigger stop loss. And that's how I let the trade hit my stop loss, basically. I talked myself into a stop loss where I shouldn't have. And now you see, look, bearish ignited open coming all the way down. Did it fill its wick? No. So it's picking up more buy orders in this block. But this hourly candle that's going to close in 7 minutes, still it has not flipped like a bullish or done its job. It's a hanging man candle, and it could come down again in the next hour. I would place an alert here at $93.50 to see if silver can close above there and maybe start its way back up. However, this is still very bearish. That this is the big neckline is trying to break down. On the 5 minutes, I don't scalp silver on the 5 minutes. I have shitty spreads, and I don't like the way how it moves. I like scalping gold better, but if I was a 5-minute trader, I see it came down, neckline, has to be somewhere right here. Okay, so it's coming right in. Will it close above? You can consider this like a double bottom. Came in there, one bottom, neckline, double bottom. Okay, liquidity grabbed, second bottom. W, second leg, traditionally has more volume, so it should maybe technically break out. If it does, closes, retest this, green, maybe it's got enough momentum to get up to the yellow line. And when it gets up to the yellow line, you can see it's got a wick, a wick, a wick, a wick. There's been no bullish candle that's closed above there. Okay, so it could just come right there and then drop right back down. Okay, that's silver. Okay, again, you can add your indicators. Now it's above the 9 EMA. You can add your 200. 200 is all the way up here. So even if it comes up and breaks through there and you're in a buy, there's that 200 EMA. It's like a big cloud. You know, it could come tap right into there and back down. So if you're in a buy, you should be doing something up there. At least taking your stop loss, break even, take some profit out, because it's still trending down, right? You're still counter trading if you're buying. Came up there, dropped down. Came up there, dropped down. But see how it's being protected? It's not breaking any new lows, and now it's building, okay? So you can leave these two like side by side like this when you're trading. I personally like gold. Okay, so gold, look, it built in here, back down, built, and now breaking out. Oh, so you see what I mean? You know, like trading can be addicting. Remember what we talked about earlier? See what I mean? Now it's coming right back up to that initial point what I bought, and now it's right back up there. Okay, so now I know it scooped up all the stop losses, grabbed the liquidity, now building. Should I buy the next candle breaking out of here? And then what happens if that's where I'm buying the FOMO, the highs, and then they bring it back down? So I got to wait for maybe a decent pullback back down to the white line. Why? Look at how most of the volume is holding at the white line. That's a solid area for 810 to be buying. Okay, maybe now there's one, all this is one bottom. Neckline is either here or here, regardless. Let's say it's here. If it comes down, you know, maybe there, that's going to be the big double bottom. And then that could be the big leg that breaks out with the bigger volume. Okay, guys, that's it for me today. I just don't like this volume trading. Maybe I'll wait for later in the Asian session. If you look every single day for the last couple months, Asian and Tokyo volume for gold has been phenomenal. Maybe I don't want to trade this ticky-tacky volume right now before COMEX closes in the next 30 minutes because, you know, I could make another mistake and I don't want to do that. So sometimes walk away from the markets and then come back at another time. Okay, guys? I appreciate everyone on the call. Silver is not for me for scalping, but if you guys like it, you know, it's just another security. I prefer scalping gold if I had to pick out of the metals. It's just better volume, better spreads as opposed to silver. But guys, I'll see you guys tomorrow, same time. We'll get started 11 a.m. If you guys like, join this free Telegram channel. It's pinned at the top. You can trade with Dave in New York, trade ideas, signals, everything we do here. And if you want to join the team, you're welcome to come onto the team. There's free blogs available for everyone, breaking down technicals, fundamentals, everything that's going on in the markets, market overviews, all kinds of stuff. Okay, guys? It's all available for you guys here. And finally, guys, if you can leave us a like, subscribe to the channel, we do appreciate it. And we'll see you guys tomorrow. Enjoy the rest of your day. I want to listen to what Trump is saying because he controls the markets, can move with the markets. Don't always think, guys, just because gold has been bullish that we got to continue just buying dips, because we could literally be buying dips and we buy into sellers and then they push us down and we're getting stopped out. So just try to have a bias for your trading time frame, and just please trade with what the candlesticks are telling you. Did the candle do what it needs to do? Each candle has a job. Did it break for a new high? If you're selling, did it break a new low? Did it close with that bearish volume? Can you cut bodies in half? Can you figure out points of control? Is the market still moving down until it gets to those big zones, those higher time frame zones that hopefully you've done a top-down analysis and you mark up those big zones, because that's where you want to be trading. Like, for example, you know, I critique myself. Right there was the original bounce at the top of the green box right there. That was the nice one. This was the one where I followed off right there. You know, the second bounce, that was technically a double bottom at that same location. It moved up, but it did not advance, right? So then it came down. 1230, that was the liquidation candle. Now I'm reviewing my trade. This is when I'm journaling. Did I have the right idea to buy there? Possibly. Did it work out for me? No. Why? Because 12:30 liquidation candle came down, liquidated, and now you see how it's building. So had I been more patient and waited for the deeper pullback, either at the white line or down here, now if I bought, it would be a whole different scenario. Now I'm in the money. Why? Because maybe I bought too early, right? That right there was a little too early. And then the market came down at 12:30. Think about what the market just did. Learn from my mistakes, guys. Please, if you can, learn from my mistakes, okay? So that you don't do what I do in the future. Yes, that's where maybe I should have used a speculating trade, maybe smaller at that time on that buy, and then 12:30, if I was still in, maybe I wouldn't take as much as big loss, but could be now watching what happened, came down, came back up, came down, broke out. Now, this could be the bigger move, now busting out of there. So it's all timing. I timed that wrong, right? 12:15, 12:20. And then I got screwed at 12:30. Now you see it's building, and you could have buy now and you're in the money, right? So guys, I can't do anything about this. This is live trading. I love live trading, and this is where I break down wins, I break down losses, I break down break evens, I break down my psychology. I know I fucked up there. I admit it. I screwed up. Where it went up, and I knew when this bar was coming down, that's when I told you guys, I screwed up. I should have accepted the loss right there. Lose 20, 30, 40, 50 pips, whatever, but not give the full stop loss to the market. That's why sometimes I do not trade with hard stops in the markets. I've mentioned this millions of times. I use a mental stop loss when I trade. When I'm trading with you guys, I show you guys where to place stop losses, right? But I don't know. I don't know what to do. I got to fix that up. I got to correct that myself. Okay, guys? So we'll see you guys tomorrow. Have a great day. Please trade careful. And we'll see you guys tomorrow, 11 a.m. Have a good day, everyone. Have a good day, everyone. Tough session, tough volume to trade. But now we'll be breaking out. Again, maybe a pullback at that 48 pullback. There's pending orders developing in that block right now. Have a good day. If you're in buys, just remember you're still counter trading against this bearish move. So please move stop loss, break evens, trail your wins, some profits. See you guys all.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.